Good morning and welcome back. It's Saturday, December 20th, and this is your weekend market briefing. If you've been holding your breath all week, you can finally exhale. After a turbulent few days dominated by a surprisingly hawkish tone from the Federal Reserve, the markets found their footing yesterday to close the week on a high note. The catalyst was exactly what the bulls needed, a tame inflation report that suggests price pressures are easing, even if the Fed isn't ready to declare victory just yet. We saw a broad rally across major indices, with technology and renewables leading the charge. Let's pull up the market dashboard and see where we finished on Friday. It was a sea of green. The S&P 500 climbed 1.1% to close around 5930. The Dow Jones outperformed slightly, rising 1.2% to finish near 42,840. Meanwhile, the tech-heavy Nasdaq gained 1%. In the bond market, the yield on the 10-year Treasury pulled back, settling around 4.51%. This dip in yields provided the oxygen that growth stocks needed to rally. Turning to commodities, WTI crude oil found support just under $70 a barrel, and gold continues to attract safe haven flows, pushing up to $2,645 an ounce. Now, let's dive into the three big stories that defined the last 24 hours. Our top story is the Personal Consumption Expenditures Price Index, or PCE, which is the Fed's preferred inflation gauge. The data showed headline inflation rising slightly to 2.4% year-over-year, while the core reading held steady at 2.8%. Crucially, these numbers came in right in line with expectations. Why does this matter so much? Earlier in the week, the Fed spooked investors by signaling that interest rate cuts might be slower than hoped. Friday's data served as a counter-narrative, reassuring investors that inflation isn't re-accelerating. It gave the market permission to buy the dip. Our second story takes us to the corporate world, specifically the logistics sector. FedEx delivered a sobering update, trimming its full-year revenue guidance and announcing plans to spin off its freight business. FedEx is essentially telling us that the near-term demand for shipping is softer than anticipated. When fewer packages are moving, it usually means less economic activity is happening. This weighed heavily on other trucking and logistics stocks, reminding us that even if inflation is stabilizing, the earnings picture for many companies remains vulnerable. Moving on to our third story, let's look at the winners. Friday was a banner day for tech and renewables. Palantir Technologies surged 8.5%. The data analytics firm has been on a tear this year, and the latest catalyst is its inclusion in the Nasdaq 100 index, which becomes official next week. Alongside Palantir, Enphase Energy jumped 8.6%, making it the best performer in the S&P 500. For investors, this rotation back into high-growth names signals that risk appetite has returned, at least for the moment. So what's next? Next week is a holiday-shortened trading week with Christmas on Wednesday. Typically, this means trading volumes will dry up, but low liquidity can sometimes lead to higher volatility, so don't get too complacent. We'll be watching for the final revision of third-quarter GDP and the durable goods report on Tuesday. That's a wrap on today's briefing. We'll be back on Monday to prep you for the final trading days of the year. If you found this update helpful, please hit that subscribe button to stay ahead of the curve. Enjoy your weekend.